Well, it's a very interesting and a very important development as far as the residential as well as commercial real estate space in India is concerned. We're talking about two of the largest resident or real estate promoters as far as India is concerned. Both Indiabulls Real Estate and Embassy are large behemoths within the residential as well as commercial real estate space in India is concerned. So now what has actually happened is that finally Indiabulls Real Estate and Embassy Group have finalized the merger terms as well as the share swap ratios of their combined as well as the joint entity. What they're going to do is they're going to merge their residential and commercial projects across the markets. Now, this also means that Samir Gehlot, the chairman of the Indiabulls Group, would now be stepping away from the real estate business. They would continue to own a minority non-promoter holding of close to 10% in the combined entity. But this particular joint entity, which would continue to be listed, but the name changes from Indiabulls Real Estate to Embassy Development. They would have close to 30 projects spread across major tier 1 as well as few tier 2 cities of India. You're talking about the share swap ratio, and Indiabulls Real Estate existing shares would now be valued at close to 92.5 rupees a share, a significant premium as far as the closing price of Indiabulls Real Estate yesterday was concerned. In fact, what is interesting is that if you're talking about the post-merger shareholding, the Embassy Group led by Jitendra Virwani would be owning close to 45% in the joint combined entity. The existing real estate or Indiabulls Real Estate promoters led by Samir Gehlot would own close to 10%, while if you're talking about some of the institutional investors of Embassy is concerned, key among them being Blackstone, they would own close to 19% stake as far as the combined entity is concerned. In fact, Blackstone has already started the process to go ahead and own stake as far as the joint entity is concerned. The remaining 26.2% would be held by the retail public as well as some of the other institutional investors of Indiabulls Real Estate is concerned. Now, this particular entity would be quite a large behemoth as far as the residential as well as commercial real estate is concerned. Total of 80 million square feet is the kind of launches as well as planned area that this particular entity would own. If you're talking about the mix of projects, 47% of the projects would be in the residential space, while another 53% of the projects would be comprising of commercial assets. The combined rent potential of all of these assets could be close to 4,250 crore rupees. So now, what is the benefit of the merger as far as Indiabulls is concerned? Well, number one, you are going to have access to some of the skills of the Embassy Group. Now, remember, Embassy Group is a very large player with some of the market share, in fact, increasingly growing, and also they have some of the marquee investors within them. As far as the entire Embassy Group is concerned, they get listed onto the exchanges, so they get access to funding via the exchanges. Also, number two, what they do get is they get an immediate feeder for the Embassy REIT listing, given the fact that some of the residential and commercial properties, especially the commercial properties developed by this particular joint entity, already has a ready buyer. So it's a very interesting deal and a very important deal as far as the real estate space in India is concerned.